good afternoon, everybody. We're just going to let some people filter in here and just give us another minute or so and we'll get started. Kevin will be on in just a sec. Thanks for joining us this afternoon. As you're filtering in, tell us where you're from. We'd love to get the chat started already and know who's in the audience. So send us some messages. Hi, Dave. Ryan Barth from Minnesota. Greg, you're on. And Greg Shatsky. My Minnesota peeps showed up. Tulsa, Stacy Hall. Good to have you guys all the way from Bar Harbor, Maine. And La Crosse, Wisconsin. It's great to have you join us today. Man, we've got people from everywhere. Awesome. Brian Mooney, another Mooney on the call. Brian Mooney from Bangor, Maine. Love having you on here, Brian. And John Whittington from Honolulu. Hi, John. Good to see you. Great to have all of you with us today. We appreciate you joining us. We're just waiting for Kevin to get his earpods up and running, and he'll be on in just a sec.
I may not even need to use it. How's my audio?
That was great.
It is? Okay, let me switch to Wi-Fi here.
Yeah, we have your warrior picture up. We would love to see your face, but other than that, you're good.
Well, here, let me.
I'm in Iowa. I was born and raised in Iowa, so it's good to see Bernard on here. Got New Jersey. Kevin, we've got people from everywhere on here with us today.
I love it. Thanks for joining.
Fun. Yeah, super fun. Well, thank you for joining, everyone. This is the Last Week in Mortgage Today. I'm Faith Howard Mooney, VP of Member Engagement at the Mortgage Collaborative. And we do really love having you all on here. It makes it so much more interesting when we can get feedback and everything from people about the things that we're talking about. I don't even feel like I need to introduce you. But for those people who may not have met him before, Kevin Peranio, who's the Chief Lending Officer at PRMG. Are you in California today?
Yeah, I'm in Newport Beach. I'm at our house. We've been here about 7 years, and I work out of the house about half day. I would say probably sometime after this, I'll be rolling into the office and grinding it out for another 8 hours, right? So that's my life.
Yeah, that's a mortgage person's life, I think. My life was 3 weeks of travel, 1 week at home for a bulk of my career. So I would wake up in the mornings and not even know where I was, where am I today?
I've done that. I've done that as well at many TMC events. It's usually after a party.
Yeah. A good party where you networked with a lot of your closest friends, right?
That's right. That's right.
Absolutely lovely times. Well, we do want you to join in the conversation with us today. So Amy Bohr says playing pool. Did you have an experience with Amy playing pool?
Oh yeah. She's the best. She's referring to Chicago. I think she's referring to Chicago. So we kind of dominated there down the street at, the only bar that stayed open at the Chicago TMC.
Yeah. They were still experiencing a little bit of lack of personnel at places when we hosted in Chicago, so there was a little bit of that while there.
I know. You would think on a Monday or a Tuesday, you'd say, hey, we got mortgage people coming. Just you want to make some extra money, step up.
Maybe we need to alert people better and just give them the heads up that we're on our way in. That's 100%. A good idea. That's a good idea. We should do that for Nashville in September. So for those of you who haven't already registered for a conference, we will be in Nashville in September. We would love to see your faces there, but let's get started. You always are like in the news, know what's going on in the news. And so I can't wait to get your feedback on some things and have you share. Please interject anything that you would love to talk about today. Members of the audience, share what you want to talk about today too, and we can get some comment as well. But I thought we would start with, there was a bipartisan Ron bill was presented. Is this really like, is Ron really going to happen? I would love your feedback on that.
Well, I sure hope so. By the way, I am registered and hotel is booked for Nashville. I haven't booked flights yet, so I'm ready. So
you're ahead of the game.
Yeah, I always do early registration. I would say the remote online notarization. It's interesting because I think the House bill passed, but there's I think they're calling it the Secure Act, right? The Secure Online Notarization Act. I think it still needs to get through the Senate. And it was reintroduced in the Senate, is what I had read recently. Obviously, we're huge supporters of it. If you had some national, some national push on that, then maybe e-hybrid closings will be a thing, right? It's such an interesting concept because either I know companies that just go all in and they just make it part of their mantra, and then I got some companies like us. We're like, hey, we have this option. Do you want to do it? And then by the time you get to closing, most people are like, it's like, I'm already getting the deal closed and make a commission. I don't really care, right? So we're trying to get that mindset changed. And I think having the remote online notarization will be a game changer for that, because then it's not a hybrid close, right? You could be completely online. I've done one before. So you and I would be talking, you're the notary. You're like, hey, what's your middle name? Francis. Where are you from? Dallas, Texas. What was your first car? Chevrolet 89 Corsica. Okay, it's you. Lily, that's like the questions they'll ask. What's your mother's maiden name? I'm not telling you all that. But then they verify you via that way, and then they open it up, and then they go through with you. So it's a pretty cool and secure process. I think something like 37 states have approved it, something like that. California has not. Now, just full disclosure, I'm not a California native. I've only been here 7 years. But I recently joined the board of, yeah, there you go, my reset. Trust me, my reset passwords are they're so dumb. Anyway, I'm recently part of the California Mortgage Banker Association board of directors, and we went up to Sacramento. And one of the things we were legislating on was the California version of RON. And California is anywhere from 25 to 28% of all mortgages originated in the country. So it's a huge last shoe to drop. If we're not going to get it nationally, get it pushed, maybe the state will do it. Well, the state has two different versions, and one allows for notaries to be based anywhere, and the other one, which is the one catching more traction, only allows for notaries that are based in the state to do it. So if your online notarization company is based in Nevada, you still can't do. You have to redo your whole business entity to be. I mean, it's just kind of weird. So, California has a reputation of kind of squeezing businesses and be like, you need to be here. You need to be thankful the weather's as good as it is. We're going to raise taxes on you, and we're going to sue you. But you're lucky to be here. Remember that? Just look outside. That's pretty much how it rolls here. That's what I've discovered in the last 7 years. So I'm just dealing with it.
Isn't having somebody locally the whole, it's like exactly the opposite of what remote online notarization is trying to accomplish.
Right. I mean, I have this saying, yeah, exactly. I mean, I have this saying that, technology allows us, to compress time, reduce friction, and scale our business. And so if I don't have to get up and drive somewhere, if I can just do it right here on the phone, I mean, that's all the above, right? At scale. So, but, there's people in Senate and House chambers across the country. I guess they control everything, don't they? They control our money. They're going to fight over they're going to fight over how much more to spend of our money that we don't even like giving to them anyway. It's like, anyway.
Well, I probably shouldn't even comment on that. But yes, those things do happen. I just recently did a transaction in February, and I did a hybrid. And, even though we were all local here and everything, man, even that made the process so much simpler. I was there less than 15 minutes to get the rest of it done.
That's so great.
which was absolutely a great customer experience because the
Well,
last,
whatever you closed on, congratulations.
yeah, thanks. Wasn't a planned move, was a quick move, but I ended up in a really great spot. So
Awesome.
that all is well. Well, let's talk a little bit about last week. We've had lots of conversations about LLPA. It's related to DTIs. It's been in the news everywhere. It seems like all of a sudden it's exploded. We've been talking about it within the collaborative for a couple months at least. But Director Thompson came back with some pushback related to fee changes. And I would just love to hear from you because you're so in tune with everyone, kind of like how you feel about that, how you think maybe it's going to end. Will it be put in place? Will it be put in place in August? Do you want to share a little bit of feedback there for the people on here?
And it's funny, I was helping out Mom yesterday because she stayed for the last night of Stagecoach, which is the big country festival out here. But they had ZZ Top and Nelly and like Diplo, so it's not just anyway. So I was taking care of the kids yesterday morning, and I dropped. We have 4 kids, so kindergarten, 2nd, 4th grade, dropped them off. Then I go to the pre-K for my 4-year-old daughter, Serafina, the little redhead, the red dragon. She's intense, and I'm waiting. I don't know if I got any credit, but I was the first one to sign the sign-in sheet. I was literally there early for both the drop-offs. Anyway, so I dropped her off, and when I was there was another mom talking, and just talking. You know how I am. I talk to everybody, and she said, "Yeah, I see all these things about these hits in the news, and are they really giving better rates to people with bad credit?" I'm like, well, so I think it's important to talk about both, right? You've got the DTI hit, which I think the industry is pretty clear on. And then you've got the LLPAs, which are FICO and LTV based. And so, the big hubbub in the news lately, which, I don't watch mainstream media. I don't watch the news. I just see headlines every now and then and read little tidbits, but I don't like, I refuse to let my emotions be played by someone I don't know. So, so the LLPAs, what they showed was the change, right? So yes, the changes were higher for higher FICOs and they weren't as high, but it was on top of existing LLPAs, which when you add them all together, people with better credit, still have overall less hits. So, I have a little bit of a cap markets background. I don't want to get into it, but I don't know what their book looks like at the GSEs. I don't know their capital requirements. I don't know, there's someone behind the scenes that's looking at that. Like they may be saying, we're about to lose our ass on, 2.4 million people losing their jobs. The default ratio is going to be here. So we need this much cash and we don't have it. So we need to get it from here, 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 and here. And so, I don't know. I mean, maybe they think, every regulator is fighting the last battle. So maybe they think we're about to have 08 again, which we're not because we don't have a credit collapse, but they're reserving against that. I don't know what Dr. Thompson knows. I don't know what the teams at the GSEs know as it relates to their cash needs. So I will support Dr. Thompson and her statement because I still think that generally people with better credit are a better risk and are getting a better rate. Now, the DTI hit is stupid. It's just stupid. I mean, I can't even imagine what someone was possibly thinking when, first of all, you have an administration that's trying to help out low to moderate income borrowers. So higher debt, in our experience, okay, and I've only been in the business 22 years, but in our business, the higher the debt, the lower and more moderate the income, the harder they are on the bleeding edge to even get into a home. So you're making it more expensive from them. I would rather you raise even more hits on the better credit on the other side to make up for this stupid, unworkable, unmanageable DTI hit. Income comes in, you think it's this, it goes there, you're under 40, comes in, underwriter says, nope, it's higher. Okay, DTI's up, redisclosed, lock went up, price went up. Hey, borrower, sorry. Oh, do you have another bar? Sure, let me add another bar. Okay, get them in. You're just going back and forth and lots of redisclosures. It's a horrible situation for the consumer. It's worse for LMI borrowers, and it's terribly unworkable for lenders. So to answer your question, I do think they're going to get rid of it. I think with all the lobbying power and everyone working on it, it's like you want 3/8, just get it, just get like 2 bases from this hit and 2 from this hit. Now, do you really have to take 3/8 from a DTI hit that's unworkable? Just find another place to get it. You're already making changes. So anyway, I hope that resonates. And
get it from somewhere else.
yeah, just get it from somewhere else.
It would solve a lot of the problems that people see with it related to process for sure. Yeah. Well, I love that feedback. You're getting great feedback in the comments too. Other people are liking that thought process as well. So we're getting close. I mean, August isn't that far away when you work it into your process. So we're getting close. So I'm gonna say, put that one out into the universe because people are gonna love it if that happens.
Yeah, I agree. I'm hoping, fingers crossed, they will come to their senses.
We are going to put that one out there for sure. So also we heard about this week a slower rate of growth with the GDP slowing to a 1.1% still increase, but slower. And weakest in 3 quarters. So slowing down. You think Fed funds, another slight raise? Think that's what's going to happen here?
Yeah, so definitely a quarter point will be announced tomorrow. I think they're done. Just my opinion. I think they're done. I'm curious if the language tomorrow will say they're done. I don't know that I actually don't think the language will change much. I think they're going to bring a lot of uncertainty on the markets. I could be wrong, but I don't think the Fed is going to say we are going to pause. We think we are sufficiently at the terminal rate. I think they're going to keep it open to give themselves the option. Why wouldn't they? And I think the stock market's already selling off today. Now, what's interesting, your point about GDP, 70% of the gross domestic product, our entire, economy is based on consumer spending. Consumer spending still pretty good, although it is mostly on credit cards. But there's still $5 trillion in money market accounts, and juxtaposed with 57% of America lives paycheck to paycheck. So you just like I've been saying for years, my whole life, and 2020 was to me like just a watershed moment. There was this huge wealth divide that happened in 2020, and you saw with the lowest rates in history, people take advantage of that and buy homes and lock in property and shelter over their head, lock in equity, lock in wealth at historically the cheapest money in the history of history. Some people still did not. So about a third of our country, whether just by age, they're not there yet, or the means to do it, they're getting priced out of the market. And so rent, I think rent is kind of this X factor. Rent has been coming down on new leases. And I think that will start to bridge that gap of that 57% that's living paycheck to paycheck. And dare I say, we have a soft landing / soft recession. Because, a lot of people don't know this. When the Fed does their meeting, every other Fed meeting, they do a dot plot. And it's basically a chart where all the voting members say, this is where we think the terminal rate is the last rate we want to stop. And they have a lot of other stats in there. And the last meeting, they did that. So they're not going to publish that tomorrow, but they will June 14th. So you did not have a consensus on the last dot plot. And everyone prior to that, you did. Raise, raise, raise. This is so easy. Inflation's high. Keep raising. But inflation has moderated. The core personal consumption expenditure came out last Friday, and it was at 4.6%. That's less than the current 4.75 to 5% Fed funds rate. That's less than the market rates, the 10-year Treasury for sure. And so, plus you got banks breaking, right? So, thank God in an orderly fashion.
Yeah.
Yeah. So GDP slowing to 1.2% is still growth. So it's not the Fed's target of say 2% growth, but it's not 2 negative quarters in a row, or as this Bureau of Economic Labor Board or whatever they're called, like a year from now, they'll look back and tell us whether we were in a recession or not. It's kind of a dumb stat, but the reality is the Fed thinks our entire 2023 GDP average will be 0.3% growth. And if we just hit a 1.2, that means you got to be under a half a point or under zero by a significant amount to bring that average down with only 3 more quarters left to hit that target. So I'll be curious to see in the next 2 meetings if the Fed will raise their 2023 GDP target. That will be interesting. If they do that, that's a soft landing, and you'll see the stock market rip.
Very, very interesting and good education for some
Sure.
of us that are less in tune with that. So appreciate that a lot. We did
Yeah,
have
you know, it's useless nuggets to tell your borrowers. You know, I mean, I don't know. Some of your borrowers like that stuff, but you know, I feel like no matter what you're talking about to a borrower, the longer you keep on the phone, the less likely they're going to talk to someone else. So just keep going.
good strategy. Kevin's sales strategy of the day is just keep them on there longer. We did have a question in the chat that I've seen in the news, kind of like mixed messages. And I'm in Minnesota, directly in the middle of the United States. Housing prices, hearing some things about dropping west, not dropping on the East Coast. You're on the West Coast. What are you have seen in the housing market?
Yeah, so it really all starts and stops with supply. So we just have less supply, right? So the demand is still larger than the supply. So and that's with many homeowners locked into their 3.25 30-year fixed. Okay, so if someone wants to sell a home, about 75% of home sellers then buy another home. But people are locking in, right? And so if you think about that, with 25% of home sellers not buying something else, then that 25 eventually grows the supply enough to where it catches up with demand. But we're not there. People aren't selling. They're not selling. And so, and you still have a wave of demand. You have people that get married and have children. You know, this I call it the 7 Ds, right? Diamonds. Oh, let's start with deployment. Okay, let's start with deployment. All right. Okay. So we serve our veterans first. We go deployment, diamonds, diapers. Then we go debt, right? Which right now debt consolidation is a big thing. Then we go divorce. Now I like to throw in another debt after that, but I can't say the same thing again. But you're consolidating and paying off debts after the divorce. Then you've got downsizing and death. So these are all 7 life events, the 7 Ds that force people to buy a house. And I don't know what happened to you, but you just bought a house. I mean, you made a move. I don't know what the reason was, but
not a divorce, but pretty close. But it would land in that same category. Unplanned move, not expecting to move, but sometimes you're put in a spot where you have to move.
And shelter, right? You need a roof over your head.
Yeah. You do it. I have never heard it put into the 7 Ds, but I like those categories and have written that down. But yeah.
Oh, you did? Thank you. Feel free to steal them. I want everyone to use it. I first heard it, the 4 Ds, and then I just added 3 more. I was like, figure out put my spin on it. But you know, to get back to your question, there's just no houses. And so, you know, if the market's this big and the demand is this big, then prices go up. If supply is this big and demand is this big, prices still go up. So it just demand is larger than supply. It's really that simple. And what we've noticed is that when the rates kind of touched in those high 5%, low 6s here, and they've gone back up, they're kind of going up and down with the market. When we notice they get down in that high 5, low 6 range, we notice people getting off the shelf with their 3.5% rate. They're like, you know what? I want a bigger house. I'm going to do it. I want to consolidate my debt. You know, credit card debt is insanely high right now. So, like my good friend Barry Habib even put on his podcast yesterday. He's a debt manager, right? Pay off 3 credit cards in your car, and yes, you're going up to a 6.5% rate, but you just saved $1,300 a month. Yeah. And then if you put that extra $1,300 a month into what your new mortgage is, you're paid off in 15 years. So, you know, and then my good friend Dave Savage over Mortgage Coach, he was in our office a couple weeks ago. He said they had some really good insights. A lot of these conversations about debt consolidation are turning into a purchase. These people are like, you know what, I'm just going to buy another house. So I feel like it's also been validated with existing home sales. They popped in February, 15%, Case-Shiller, FHFA, home price index. A lot of these home price indexes in January and February and March, they're starting to show home prices going back up. It's spring purchase season. So, I screamed from the rooftops between November, December, and January. That was the best time to buy, in my opinion. You could do a 2-1 buy down and get around the rate. But now we're back to multiple offers. And, did you have multiple offers on your home? I don't even know.
No, not in that situation because I didn't own the cell. So I did not own the cell. So I'm sure it will though, because here there's no supply. So what I found when I moved is I was looking in a very specific area. I have a disabled adult child that I kind of need to stay in a certain community, 3 very large suburban communities. And the property that I'm in because of a TMC lender member who happens to do financing for somebody who builds.
Nice.
Because it was the only property in the 3 communities that I was looking for that I could move within a 4-month period of time.
And when did you close?
February. Yeah.
So you probably went under contract in that sweet spot,
Yeah.
where there's a little bit less competition. Well, you're obviously a saint. You're taking care of family and we don't have to get too personal, but I think you shared enough. I think everyone in here loves you very much.
Everybody pretty much know. Everybody in network that knows me, a lot of people know the situation. But yeah, it was an interesting time. I mean, I got a decent rate. It's below 5.
Nice.
With the help of my builder. Is not where I would want it to be at, but ultimately it worked. And I think that kind of proves the point about people consolidating debt and those things. And if they can find a way that ultimately it works, I mean, the rate didn't really matter at that point. It was what it was, and we'll go with it. And hope that it changes and it's a little bit lower than that, and I can reduce that down the road. But
next year, I think next year the Fed will cut rates. Next year, it's an election year, right? The economy, if it's going to show some slowing or some cracks due to higher rates, or if inflation comes down, then if inflation continues to come down, which this May 10th reading coming up on the CPI report is supposed to be a really game changer, removing a year ago comp, it's pretty high, especially in housing, which is like 38.5%, 39% of the whole, index. The Fed will be seeing this stuff, and so. There's no reason to keep rates, in the 5 to 5.5 range if you're the Fed, if, people can't buy a car, because it's just too expensive, or, credit gets so tight. And so what will, and especially if there's job loss. So what I see happening is Q1 of next year, I think the Fed will finally cut rates for the first time. And so think about all the loans we did in the last 12 months. In all the loans we're doing the next 12 months, you've got 2 years of purchases. Let's just call it $3 trillion in purchase money, all eligible for refinance. So I truly think there's going to be a little mini refi wave in a year from now, on top of spring purchase season. And again, you bought, a home, the National Association of Home Builders, they came out and they said that, 17% of all new construction is only 17% is ready to sell. So 60% is still like being built. 24% is simply just under contract. So you hear like there's, this many hundreds of thousands of homes, new construction, 600,000. And there's like 77,000 that could actually move into. So again, there's just a limited amount of supply. It's like something like 1.2 months worth of supply. It is up a little bit from a year ago. It is up overall net, existing and new, but it's still very low historically. And if rates come down, if the Fed pauses and the bond market feels good, like, okay, here's where our cost of money is. Now we'll put some more money into treasuries. We'll put some more money into mortgage backs, or a safe bet that will bring interest rates generally down to a certain amount. And you and I both know loan amounts just keep getting larger and larger. I mean, every quarter rate on your note rate is significant on payment savings. So I think the setup is coming. The worst is over. Last half of last year was tough, but home prices are not going down. I just don't see it happening.
It was interesting because one of the things that I found out there is the median mortgage payment and the rise of that. But like that, even for being the median mortgage payment, it rose 1.6% in March. 1.6% doesn't sound like a lot, but a median mortgage payment at almost $2,100 a month,
Mhm.
it being the median. I thought that was, I
It's
didn't think it was
unbelievable.
unusually high, but yet it was higher than what I thought for a median, mortgage payment.
I've been tracking that. I go to MBA.org. We're members of the National Association, the Mortgage Bankers Association, and in their newsroom at the top on MBA.org, you go to newsroom, there's a bunch of articles, and they constantly post the median monthly payment. Now, last year, remember, we had the historically low rates ever in February of 22, and then they shot up all the way into June. In just that February to June, I think the monthly payment went something like $1,400 a month to $2,300 a month.
Yeah.
So $900 difference in that median payment like that. And so where your stat was year to date, you share with me, it's still down from last year significantly, even though it just went up a little bit this year because the rates just keep bouncing around this little range. But yeah, I mean, that's a big deal. I mean, you're competing for someone's monthly dollars, right? Is someone, and that's median. I mean, imagine if you lived in
That's
San
median,
Francisco
yeah.
or New York, and LA. I mean, LA and San Francisco, I'm not there. I'm south in Orange County. But those two markets are so big, they just outweigh all the numbers in California for home prices, for voting, for everything. It's like for policy, like, thank God the weather is not controlled by those two cities.
Well, thank God this city doesn't control any weather because we had snow last weekend, believe it or not.
Oh
So
boy. Oh boy.
didn't stay, but everybody that's on this line that is from Minnesota is probably officially done and has already brought out the flip-flops, even though we've had a little bit of the white stuff. So yeah, can't believe how quickly time went by. It is always a pleasure talking with you, hearing your feedback. I always love it. You have a slightly different spin on things. So it's always, I'm not a news watcher either. So I like to hear my info from a bunch of different people. And really appreciate you always being willing to share that with the TMC family. So thank you.
Of course, my love, the C and TMC collaboration. That's what it's all about. I love it.
It is. We believe that too. Well, we look forward to having you back again sometime soon.
All right. Thank you, Faith.
Thanks everybody for joining.
Cheers.